as per this adjustment. The company purchased during the year building worth rupees 1,60,000. So building is already prepared. Dividend paid during the year amounted to rupees 20,000. Paid during the year, that means it would be recorded either it would be recorded in a fund flow statement as well as in a profit and loss account also. So there are 4 adjustments, nothing more than that. Now if you want to prepare accounts, ledger accounts more, which would be providing some systematic accounting system and easy to understand the solution of the problem, then you need to identify the changes directly without any adjustment, directly in the balance sheet. Now see the share capital. Share capital last year was 3 lakh, current year is rupees 4 lakh. So I am preparing the share capital account also here for your understanding. Next time onwards, if you understand directly without preparing an account, no need to prepare the share capital account also. See the debenture opening and closing balance, it shows different. Last year was 2 lakh, current year is 2,50,000. So if you want to prepare another account, debenture, that also you can prepare. P&L account, so which we are going to prepare, that is adjusted profit and loss account, and that is necessary to prepare here. Creditors, bank overdraft and provision for taxation is already recorded in working capital statements. Building and machinery is already prepared on the asset side. Stock, debtors and prepaid expenses, these are already recorded in the current assets in the working capital statement. Now after preparing a necessary account, first you have to write all opening and closing balance into the respected account, and very carefully. Now see the building opening and closing, it shows 1,20,000 rupees opening. Now I want to tell you, opening balance is always recorded on the debit side because of this is an assets. So last year balance is always start on the building account debit side, and the closing balance is written on the building account credit side with the amount of rupees 1,20,000 here, and the closing balance, it is 2,50,000 rupees here. All right, so anyway you can write it like this also, balance brought down, and this is balance carried down. Anything you can write, whatever you want to write, you can write it, whether opening and closing balance and balance brought down and balance carried down. So this is a building opening and closing. Then the machinery is also assets, so opening is here, closing would be here, and the value is 3 lakh and 2,60,000. So to opening balance 3 lakh rupees machinery here, and the closing balance 2,60,000 rupees here. The next is share capital. The share capital opening and closing balance is 3 lakh and 4 lakh rupees, but share capital is a liability and the credit balance. So the opening balance will start with the credit side 3 lakh rupees, and closing balance carried out, and the closing balance at 4 lakh rupees on the debit side as a last item. Correct? So this is your share capital. Why we are written it in the reverse than the assets? Because of capital is a credit balance. So opening is here, closing is here. Now see the adjusted profit and loss account, that is also your credit balance because of it is given in the liability side. Opening would be written here, and the closing you can identify here. I'll just move this little bit on this side because of otherwise it would be chaos. See here, adjusted P&L account. Right like this. Now see, opening is 40,000 and the closing is 80,000. So by balance brought down, it's 40,000, and to balance carry down is 80,000. Just confirm the balances. That's right. Yes, it is. So first adjustment, the net profit for the year was rupees 40,000 after charging a depreciation. Fine. This would not be considered here. Right now it is not considered because of this is an adjustment given for the calculation of adjusted profit directly, because of they mentioned that after charging a depreciation the net profitability is rupees 40,000. These adjustments can be used, but this would be used to calculate the adjusted profit by another method. I'll tell you how it would be, but not now. So continue with the second adjustment. During the year, depreciation charge was rupees 30,000 on building and 40,000 rupees on machinery. I think so everyone must know the journal entries of this transaction. Ultimately, this depreciation charge on the respected assets. All right. So the depreciation account debit to building account as well as to machinery account, and ultimately this depreciation is recorded in profit and loss account. But as I already mentioned regarding the adjusted profit and loss account, depreciation is purely non-cash item, and that's why it would not be affected to fund. And if it is not affected to the fund, then the one item should be reversed, and reversed in the case of added back to the profit, because of it was already deducted from the profit and loss account, and that's why your profit has gone down. Now we want to identify the right profit and corrected of the all non-cash items. That's why this type of non-cash item should be reversed. And for reverse entry, we need to add back into the profit. How you can add back into the profit? Where the current year profit has written from the opening and closing, current year profit is written on the debit side. Opening balance, that means last year profit, it was written on the credit side. And the current year profit, that means this year profit, 2003 years profit, it was written on the debit side as a last item. So we need to add back into that. So if you want to add back, it should be recorded on the debit side. So this depreciation would be recorded in the adjusted profit and loss account debit side. To depreciation, machinery and building. Machinery and building, and the values of that: building is 70,000 and the machinery is 40,000. Just confirm that whether it is right or wrong. It's 70,000, and that is wrong. It's actually 30,000 rupees on building and 40,000 rupees on machinery. Now it would be impacted on this, as we were actually write an entry here. Building and machinery, both the accounts are credit. So posting in the building account credit side by depreciation or P&L, that building is 30,000 rupees here, and in the machinery account by depreciation P&L account rupees 40,000. So another effect would be recorded in their respective accounts as a credit item, because of the depreciation is deducted their assets value. So this is what all about the second adjustment. Now moving to the next adjustment, that is the company purchased during the year building worth rupees 1,60,000. Company purchase. So company purchase an assets, and it's purchase, that means something comes in. What they purchase? Building purchase. So building comes in, building account debit. Here it is not mentioned whether it's a cash or credit, so we assume that it's a cash and bank. So cash and bank, paid through check, cash and bank account is credit. Building comes in, cash and bank goes out, and that is 1,60,000 rupees. So now on the basis of that, the amount 1,60,000 rupees is purchased. It comes in building account debit side posting, cash and bank account 1,60,000 rupees. 1,60,000 rupees. So this is already posted, but cash and bank account with the purchase amount which is remaining, and that is recorded in the fund flow statement as an application of fund. So when we are going to prepare the fund flow statement, the remaining posting will be done in that case. So the building purchase is already recorded. Now dividend paid during the year rupees 20,000. Dividend paid, right? Cash goes out. So the entry is dividend is an expense, dividend account debited to cash and bank account. Ultimately this dividend is recorded in adjusted P&L account. It goes out, right? But it's recorded twice, because of once is deducted from the cash, other one is recorded in P&L account. So your profit has been reduced, so it's impacted twice. I told you, those entries which are non-cash, provisions and entry twice affected to the fund, all that entry has been reversed. One is non-cash is already reversed. Now this is actually recorded twice. Cash and bank paid. So cash and bank goes out. So it reduces, so it already affect the funds. So which is already recorded in the fund flow statement. And the dividend is an expense, that is also recorded in recorded in P&L account debit. So your profit is also reduced. So actually amount is only 20,000 rupees paid, but it affects twice. One is reduced profit, other is reduce your cash. So one entry should be reversed. Which one can be reversed? The P&L entry must be reversed, and that's why added back into the current year profit, dividend would be written here. So dividend paid 20,000 rupees added back into the profit. Alright, so this was your last adjustments. Now all adjustments are over. We'll need to close all the accounts one by one. This would be recorded second time. So first is, which side is higher? No, not anyone, both the side it is tallied, it's square off. Now see here the situation of this machinery is also tally and it's square off. Share capital, when you close the share capital, which side is higher? This side is higher. So 1 lakh rupees is shortage on the credit side, that we need to write here by cash and bank. It's naturally bank only, but 1 lakh rupees issued shares 1 lakh. So now in this way it's concern, but here we make a star because of the cash comes in, that's why it's increased, and the amount of other entry would be recorded in the fund flow statement. Now close this account and we will find out the adjusted profit and loss account, adjusted profit amount. Now close this and it would be higher debit only, 80, 1 lakh and 1 lakh, 70,000 rupees total of the debit, and the difference is 1,30,000 rupees, that is your adjusted profit, and this adjusted profit is recorded as a fund flow item. It would be recorded as a fund flow sources. One is increase in one capital. Now adjusted profit is another item, that is 1,30,000. Then there is one purchase of building, 1,60,000. We need to just identify which are the things to be considered. Dividend paid 20,000, share capital issued 1 lakh. So these are the entries would be recorded in the fund flow statement. So these are the almost concerned with the changes of all ledger accounts and adjusted profit and loss account. Now moving to the last part of this problem, and that is fund flow statement. So fund flow statement we are preparing here in T-shaped format. It's an account format. Here on the left hand side it shows a sources of funds, and on the other side it shows an application of funds, and these values can be identified one by one. We will start first the values which we will find out from the adjustments. See here, the purchase of building which was actually recorded in the ledger accounts, and purchase of building it's actually cash and bank. As I already told you, cash and bank entry is it's remaining to record, which is credit, which is actually out of the business, and that's why it's an application of fund. So purchase building, it's a first item, application of funds 1,60,000 rupees. So this is a value which is actually goes out from the business. Now the second item is adjusted profit. Adjusted profit, it's your sources. Adjusted profit is always your sources because of your profit. The profit is always increase your fund, and that's why it's recorded in the sources side. Then the next is increase in working capital. Increase in working capital, it is your always application of fund. Increase in working capital. Working capital has been increased. That means ultimately the fund is utilized, and that's why it's an application of fund. Fund goes out from the business, and that's why it's recorded on the application of fund. The next is dividend paid. Cash and bank goes out. Cash is actually out, fund goes out. So that's why dividend paid during the year consider as an application of fund. That is also a part of reducing of your fund. Share capital issued comes in. So equity share capital comes in. Ultimately the cash comes in, the fund comes in. The sources of fund of rupees 1 lakh. As we were prepared, maybe you prepared also the debenture account, but the debenture it shows the last year 2 lakh, current year is 2,50,000. So that means during the year debenture increase. Last year it was 2 lakh, but current year it's 250. That means higher than the last year. It means during the year they issued debentures, and in case of they issued the debentures, fund comes in. Fund comes in, it means it's your sources of funds. So debentures issued rupees 50,000 shows as a sources of fund, right? So whatever the informations we have and we collected from the ledger accounts and profit and loss account is already recorded here, including adjustments entries are also recorded here. Working capital statements entry is also recorded here, like the changes of your increase in working capital. Now what are the things to be remaining? Only balance sheet direct information. That means now we have to refer the remaining balance sheet informations which are not affected through the working capital or adjusted profit and loss account and ledger accounts can be directly recorded in this particular statement. Start with the liability side first. Share capital, it is already recorded here, so it's already done. Debenture, it is also recorded here, so it is already affected and the entry is already given. P&L account, P&L account is already recorded in adjusted profit and loss account, and the difference of adjusted profit is already recorded, so that is also done. Creditors, working capital statement belongs and it is done. Bank overdraft, done. Provision for taxation, done. So liabilities over. Assets, building changes, it's already recorded here where the building was changed. Then the next is machinery. Machinery is also already recorded in the machinery account. We don't have any adjustments from the machinery account in the fund flow statement, so it's almost done. We don't have any transactions regarding that. Okay, fine. Then the next is changes where we'll need to identify stock, it's already done. Debtors, which is already recorded. Prepaid expenses, that is also done, where we find out the changes of that. So almost it's actually find out the changes of the particular concern, that the whatever the item and whatever the informations which we are carried here, that is recorded in the respected account. Here we just need to identify what was we prepared in adjusted profit and loss account. The adjusted profit and loss account may be showing some amount of changes because of we were consider adjusted profit and loss account. There was some mistake. Opening balance was 40,000 and the closing balance was it's 60,000. It was not an 80,000, but we were considered 80,000. So the 20,000 rupees we were wrongly considered more, so which would be rectified here. So instead of that 80, if it is 60, then this is also changed 1,10,000 instead of 1,30,000. So the changes of adjusted profit and adjusted profit because of the balance was changed. Now all entries are recorded in the respected account. Here the answer of a fund flow statement must be square off. Just check it out. 1, 210 and 260. So the total of the sources is 260. Now application side is at 180 and then the consideration of that it's 260. So the fund flow statement is square off because of these transactions are occurred. So this is the way to sort out the fund flow statement, the sequence, understanding the way of actions, and one by one all the transactions to be affected and recorded in the respected statement. The answer would be considered. That's it. This is what the fund flow statement. As we already discussed the problem number 1 in fund flow statements, that related to the how to solve the fund flow statement, which are the steps to be followed to solve the fund flow statements, everything I just give you a brief idea of that particular questions. Why it's in consideration of brief? Because of the problem was very small. Just I want to introduce the problem of fund flow statement in front of you. Now here I am taking another example for you that is a little larger scale. There are many adjustments, many type of changes possible in fund flow, and that the changes of fund flow would be considered with the multiple adjustments in the multiple accounts. So let's move the question number 14 in your assignment segment. So in the assignment segment, you just check it out. The problem number 14, that the following are the balance sheets of Shah Limited for the period of 2005-6 and 6-7. So the period of 2005, 6 and 6, 7, you just need to check it out, and that questions we are discussing here in this particular part of video lecture. See, now I hope everybody have that question with you, and now along with these questions we just try to see. Now if you are going to see the balance sheet liability side, there are many items. Start with the equity share to preference share, then the reserves are given, debentures are given, proposed dividend, then the provision for income tax, depreciation fund, and current liability like creditors, outstanding expenses and other things. As well, in the asset side also, intangible and tangible assets are given.